Picture this, you're staring at a jagged stock chart, numbers flashing across the screen, the market's pulse beating fast. Somewhere in this chaos hides a secret pattern, the kind that separates pros from amateurs. Pring's technical analysis explained, promises to decode how the masses repeatedly make the same moves. But can you really read the crowd's mind before they act? Stick around, because you're about to learn how. Before you trade, you've got to understand the crowd. What drives masses to buy or sell in waves? This section cracks open the human habits behind price moves. In the early 80s, Pring points to Alcoa's stock plunging after terrible earnings. Investors didn't dig deep, they panicked. But someone watching the chart saw a pattern, a quick drop, then steadiness. Knowing traders often overreact, they predicted a bounce back before the crowd jumped in, capturing the rebound for profit. Think of price movements like waves on a beach. When surfers see a big wave forming, they position themselves just right to ride it. Likewise, price charts reflect collective moods, waves of fear and greed shaping highs and lows. Pring teaches you to read these waves, not just the splash, making the invisible visible. Understanding patterns means more than spotting rises and falls. It means hitting profits just before others do. By tracking how fear chills the market, you learn to buy near bottoms and sell near tops. This isn't guesswork. It's timing human habit, turning emotional chaos into your calculated edge. Charts alone are just squiggles until you add tools. Pring's arsenal of indicators turns guesswork into precision. Let's break down the most powerful instruments. Pring highlights the 50-day and 200-day moving averages as a gold standard. Take Apple's stock. When the 50 crosses above the 200, traders call it a golden cross, a buy signal. This simple crossover wasn't magic, just a line revealing shifts in market momentum, helping investors catch trends early and avoid costly whipsaws. Oscillators are like radar for price extremes. Imagine a pendulum swinging between overbought and oversold zones. RSI or stochastics tell you when the pendulum is about to snap back. Pring shows how relying on these signals helped traders exit on euphoric highs or dive in at despairing lows, cutting losses and boosting gains. Volume is the silent storyteller beneath price. Pring's favorite example is the volume spike that confirmed a breakout. When Google's stock shattered resistance, the surge in volume validated it wasn't a false alarm but a game-changing move, signaling confident buyers entering the stage. Without volume, charts lose their voice. When to enter or exit, it's the million-dollar question. Pring's methods aren't crystal balls but close enough, blending science and psychology for perfect timing. Pring recounts the story of a trader who spotted a stubborn support line in Microsoft shares around $30 in the 90s. Every time it dipped near this level, buyers flooded in, preventing a deeper drop. This support zone became the trader's reliable entry marker, turning a potential gamble into a strategic buy with a safety net. Chart patterns like head and shoulders or flags aren't just fancy shapes. They're the market's secret language. Pring dives into a classic head and shoulders pattern that signaled BMW's bearish turn in the late 90s. Recognizing these patterns means you're not guessing. You're translating what millions of players signal with their buying and selling. Behind every chart, psychology runs the show. Pring reveals how price levels where investors feel safe or greedy become magnets. Spotting these triggers lets you jump in early, riding waves fueled by collective emotion rather than cold data. Master this, and you're surfing sentiment instead of swimming against it. Remember that jagged chart from the start, the one packed with hidden signals. Now you see it's more than squiggles, it's a map of human behavior and emotion. By learning to read these patterns, you shift from guessing to knowing. Try this tonight, pick a stock, notice its recent support or resistance, and imagine the crowd's feelings. You're not just watching numbers, you're stepping inside the market's mind. Subscribe for more book summaries like this one.